you're going to see the actual liquidity speculating on Bitcoin as an investment asset grow exponentially over the next few years. Bitcoin's the only investment instrument that you can't print more of.
Right. Ever. Yeah.
And so why shouldn't you try and accumulate as much as possible while you can? The best thing about Bitcoin, and I'm the first person to say, you invest in Marathon stock, you're investing in the management team and my capability to run the company. Nobody runs Bitcoin.
Right. Yeah.
This is the purity, the beauty of Bitcoin as an investment asset. And this is why governments should feel comfortable investing in Bitcoin, because nobody controls it.
Yes.
Right?
Yeah.
It's down to pure supply and demand or market sentiment. What a lot of people, I think, forget about, and all, for lack of a better term, let's say non-Bitcoiners, they compare Bitcoin to things like gold, silver, and other commodities that aren't finite. Bitcoin's the only investment instrument that you can't print more of.
Right. Ever. Yeah.
And so why shouldn't you try and accumulate as much as possible while you can? Because no matter whose math you do it, if Bitcoin's going to go to zero, well, my business is a mining business is going to be out of business anyway. So why shouldn't I try and have as much Bitcoin on my balance sheet as possible? Because if the US government decides to hold and buy Bitcoin, if other sovereigns decide to do it, the price of Bitcoin's only going to go up.
Yeah.
Which means that my balance sheet's only going to get stronger and stronger and stronger.
Fred Thiel, chairman of Marathon Digital, a leading Bitcoin mining company, shares his insights on Bitcoin's use case and its future prospects, especially in terms of institutional adoption. In this video, Fred discusses the massive potential of pension funds, which are currently conducting due diligence and preparing to allocate a significant portion of their balance sheet into Bitcoin. Of course, this will have a significant impact on the price of Bitcoin. As we bring you more segments from this interview, don't forget to like the video, subscribe to the channel, and turn on post notifications for more content like this. Join the conversation by sharing your thoughts and comments below. Every interaction helps with the YouTube algorithm and contributes to the channel's growth.
Organizations like this are now seeing, hey, Bitcoin has this track record of over time continually growing in value. And why shouldn't we hold it? And now there are ways they can hold it easily. And you're starting to see with the ETFs a little bit of institutional investing. But the floodgates haven't opened yet, because most of the large wirehouses, the Merrill Lynch's, et cetera, they still haven't passed compliance on these ETFs. But the minute they do, and my understanding is many of them are in the process and it's going to be 6 to 9 months, but even if it's a year out, you've got $40+ trillion of pension money sitting out there. And I've always kind of thought, hey, a 1% allocation would be insane. But when I talk to some of the advisors at these big banks who are advising these pension funds, and I said, what are the pension funds saying their allocation would be? And I'm being told it's 2 to 3 to 4%.
Wow.
That's a huge number.
Yeah.
And so it gets me back to this thing, okay, it makes sense to own a lot of Bitcoin.
Yes.
Because other people are going to want to own a lot of Bitcoin. As the volume of Bitcoin in ETFs grows, and you think about how many retail investors operate, bad news, stock exchange drops, the NASDAQ, S&P 500, whatever, drop 10%. Well, if they decide to sell 10% of their holdings in Bitcoin all at the same time, the market is still fairly thinly traded in the open market. And so you will likely see a bigger drop when there's a drop. And the OTC desks may not have the capacity to absorb that volume. And so people have to be very careful how they look at the markets, because when you get too much Bitcoin sitting in a concentrated set of hands, when those hands make a decision and move, things can happen that are disproportionately more violent than otherwise. Now, what's interesting is what's going to happen, I would say, in the next 6 to 12 months is we'll see a whole series of derivative financial instruments, which will allow people to trade essentially risk and hedge risk in the ways people can do around other commodities.
Right.
In the oil industry, there's all sorts of ways you can do things to hedge your risk. And so we're going to start seeing more and more of that around Bitcoin as a way to create a much more liquid market. Because imagine a future where the US government owns 2 million Bitcoin. That's 10% of the available Bitcoin. Saudis, Russians, Chinese, India, et cetera, decide to own 20% in aggregate. Okay, now that's 30% of all the Bitcoin in the world has suddenly just is off the market. So that leaves 70%. You could argue that roughly 4 million Bitcoin, the keys are lost. I mean, Satoshi's wallet, stuff like that, right? Okay, so that's another 20-ish percent. So now you're at 50% of the Bitcoin is kind of locked up. And then throw the ETFs in there, already at 1 or 2%, MicroStrategy, 1% and growing. Okay, so now you're kind of at 60%. Not a lot of liquidity in the market. And so you either have to get in now, or it's going to get a lot harder. And the market's going to have this roaring demand for these derivative instruments. And so you're going to see the actual liquidity speculating on Bitcoin as an investment asset grow exponentially over the next few years. Bitcoin trades purely based on the sentiment people have in its value and its scarcity. Period. That's it. And so it's a much more pure form of investment. And when you see Bitcoin move, it has 2 times the volatility of an S&P or a NASDAQ, but look at how fast it bounces back, right? If Tesla produces bad numbers, the stock drops, you have to wait till the next earnings before the stock likely starts rolling back up again. Mt. Gox, or the state, the German state that sold all this Bitcoin a couple of weeks ago, price dropped, came right back up. Right? You look at the dips we've had and the amount of volume of Bitcoin that's gone into the market that's been absorbed quickly, and the prices come right back up.
Yeah.
That speaks to the amount of demand there is for Bitcoin. And that speaks to the health of the Bitcoin liquidity market today. Right? And I think that the concept we've had of these cycles that we've had before, 4-year cycles, and the miners are going to capitulate. The miners' impact on the price of Bitcoin today is insignificant, other than miners holding a lot of Bitcoin and selling. But the amount of Bitcoin miners produced daily that is sold into the market is becoming a more and more insignificant piece of the equation. And so that leaves just pure supply and demand. And the best thing about Bitcoin, and I'm the first person to say, you invest in Marathon stock, you're investing in the management team and my capability to run the company. Nobody runs Bitcoin. Right? Yeah. This is the purity, the beauty of Bitcoin as an investment asset. And this is why governments should feel comfortable investing in Bitcoin, because nobody controls it.
Yes.
Right? Yeah. It's down to pure supply and demand or market sentiment. Right?
Do you see the possibility of the United States moving into a stage where we actually have a national Bitcoin reserve? And if so, do you think other countries would emulate that strategy?
Absolutely. The U.S. is the single largest holder of gold in the world. The dollar's not backed by gold, but gold allows the U.S. to project power into financial markets. Other countries hold gold as their reserve. And actually, it was the holding of gold that drove Nixon to decouple the dollar from gold, because other countries were withdrawing their gold from the U.S. system because they saw the spending that was going on at that period of time, and they thought the U.S. would go bankrupt. So the U.S. government holds a lot of gold. They're the largest landowner in this country. They own about 28% of the land in the country. And what recently happened was the expiration of the petrodollar, which was this agreement where the commodity producers would price their commodity in dollars in protection for, in exchange for protection from the U.S., and then they would invest that in treasuries. Right? That's now gone. And so we've seen the U.S. as a reserve currency drop insignificance, and it's now down sub 50% as a holding asset. The Chinese now buy gold instead of treasuries. Japan, which was one of the biggest buyers of U.S. treasuries as they were going through their recent financial situation, have now also tapered. Comically, one of the largest buyers of treasury bills, which are short-term, is Tether. Right? They're the sixth largest buyer. They buy at a nation-state level.
How ironic.
Right? And so the U.S. needs to fund its debt somehow. And if people aren't buying dollars or putting things in dollars, that is a precarious situation. So that leaves the U.S. with only a couple of alternatives. They either have to let the dollar drop in value significantly and have high inflation so they can inflate away the debt, but that would be disastrous. The other thing they can do is they can invest in an asset like Bitcoin, which will over time appreciate in value. And if it can appreciate at a rate faster than the U.S. total debt appreciates, then now you have something you can use to offset the debt over time. And if the U.S. were to hold 2 million Bitcoin, and that Bitcoin goes to $20 million over 10, 20, 30 years, then now all of a sudden the U.S. would be holding at $20 million, roughly 40 trillion plus. Well, the federal debt today is 35 trillion and growing. And there's no way the government can service that debt at current inflation levels, interest rate levels.
Yeah.
Right? And so the minute the U.S. does it, they will now have the ability to project power in the Bitcoin market because they will have pricing power because of their supply, just like they do with the Strategic Petroleum Reserve. Why does the administration sell oil out of the Strategic Petroleum Reserve? To drop the price of gasoline, to lower inflation. Right? Why does the Strategic Petroleum Reserve exist? Well, it was to protect us from price shocks in the outside market. Well, today the U.S. is arguably the largest oil producer in the world. And so they have the ability to not suffer the consequences of high international oil prices in the same way. But if the U.S. does it, then everybody else is going to have to do it, because you can't be a country and not have a strategic reserve of Bitcoin if all the other countries have it.
Right.
And countries like Russia, China, and others look at Bitcoin as a neutral currency that isn't controlled by a government or a country, that allows them to trade independent of any sanctions the U.S. would ever do. And so if the U.S. wants to keep them from trading in violation of sanctions, they have to also have enough Bitcoin so they can impact that market. And so it becomes an issue of national security, which has nothing to do with cybersecurity or anything like that. And when President Trump talks about we should have all Bitcoin mining in the U.S., part of that is a thinking that if you have Bitcoin mining in the U.S., then you have the ability to determine what transactions get processed, which is why every single sovereign who wants to hold Bitcoin is going to want to have mining in their country, and which is why they're all going to want to operate their own mining pools so that you can't essentially, through sanctions, OFAC, et cetera, control their ability to transact in Bitcoin.
There you have it, Fred's insightful discussion on what's next for Bitcoin. What are your thoughts on Fred's analysis? Share your comments and observations in the comment section below. Don't forget to like the video, subscribe to the channel, and share it with others. Thanks for watching.